Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But before we get to our next guest, let's take a look at the four major indices, which are about 1% below when we started the show just a half an hour ago. So we're seeing a massive turnaround here. S&P 500 down 0.4%. Dow Jones Industrial Average flip-flopped about 230 points. We're now down 126 points. NASDAQ 100 down 0.7%. And the Russell 2000 down 0.3%. So seeing some weakness here. Dollar rising, Kev. Yields rising, Kev. And that is what's dictating where the equities are going right now. So we'll continue to watch that. Some weakness there in big tech. All right, Kev, let's bring in our next guest for our Cash Tag segment, and that's going to be Megan Brantley, Vice President of Research at Likefolio. Welcome back to the show, Megan.
Thanks for having me, guys.
All right, so DocuSign reports earnings after the close. Shares are down over 60% so far this year. All-time highs of about 314 about a year and 1 month ago. But it seems like, Megan, I'm not sure what your data is showing. You're going to give us that. But it seems like this is a leader in the space. They've got little as far as competition goes. The growth rates are starting to slow down a little bit. But are you still seeing integration from consumers on this product? Because it's such an easy product compared to the way that we used to do things.
Yeah, it really is convenient. And whenever we look at mentions from consumers who are talking about using DocuSign, namely for their e-signature product, we see lots of mentions of saying, you know, this is so convenient. This seems so much more efficient. This is easy. And so happiness is actually pretty high for DocuSign. But as you mentioned, you know, on the flip side, that growth is slowing down. So whenever we look at mentions from consumers who are talking about either using DocuSign or maybe signing up to use DocuSign for the first time, those mentions have dropped by about 8% year over year. So I think that, you know, that's not so great, but that's also likely to be expected. As you mentioned, I think shares are trading lower or more than 60% lower year to date. And, you know, especially after their last earnings report, there was a pretty negative reaction. And so perhaps the bar is really low. But from that last chart, what you guys were looking at, that concept of remote work, this is one of the macro tailwinds that DocuSign does have going for it. So these mentions, if you look at that far right bar, those are up by about 45% year over year. So there is this concept of, you know, people need to be able to conduct business online, and they need to be able to conduct business remotely, because this is something that has stuck around, you know, post-pandemic, post-COVID. So this is an example of a potential long-term tailwind that we would expect to, you know, help a name like DocuSign, but definitely in the near term, you know, we are seeing signs of that slowdown in growth rate, especially in those purchase intent mentions.
Megan, DocuSign is electric windows in your car, right? Once you have them, you can't go back to winding up the window like that. You can never sign papers again once you're able to do this on your computer. I mean, doctors, lawyers, any contract that you might have with computers and everything we know, you can't go back to the other way. So I understand valuations were high, valuations have come down, and this is a company that it may not be growing, and the market, the overall market is punishing names that aren't profitable yet and growth stocks. But this company, they went from $250 million in revenue in 2016 to $2.1 billion last fiscal year. This company is growing like a weed. It's just not much like Zscaler. It's just what they took out of this company is valuation, right? And overall, you know, just the overall price of the stock. This company is still a healthy company growing. What do you see, Megan? I mean, you're right. It can't possibly grow at a faster rate than it did during the pandemic, but it's still growing. Cash flow is still going up. Yeah. It's still a healthy company. It's just not the on fire healthy company that it was during the pandemic. What part of that do I have wrong?
No, I think that my favorite part is the whole concept that, you really can't put the genie back in the bottle, especially when it comes to the efficiency and the convenience that DocuSign provides. I know just anecdotally, on my last backpacking trip, the first thing whenever I came to service, I received a document that I had to sign in my email and was able to do it in basically the middle of nowhere, California. I couldn't do that before, right? So this is really making things efficient for businesses and for consumers. I think that one area that we are seeing positive growth for DocuSign is just overall buzz. And those are kind of those mentions, like I was talking before, about people talking about sentiment, their experience with DocuSign. Overall buzz is up by about 42% year over year. So that's pretty significant, and that speaks to the growth that you're highlighting. And a lot of these mentions, too, are from consumers saying, why aren't these businesses that I'm working with using DocuSign yet? Can they please start using something like DocuSign? And so I think that that's, definitely something positive long-term. That happiness level for us, especially at Likefolio, is something that we like to key in on whenever we're trying to understand long-term growth perspective. And I think another interesting point is, we looked into Adobe Sign before I came in on the show, and we're not seeing a ton of traction in Adobe Sign. I think that's one of its biggest competitors, or that's been touted as one of its biggest competitors. And we're not necessarily seeing that as a threat as of yet. So I think that that's positive that in our universe, at least, DocuSign is still the market leader, at least in this area. And, another thing that DocuSign is doing well, we talk about that remote work, but just this concept of mobile document management, the fact that I was able to conduct business and take care of things and sign things on my phone versus having to be on a PC or a desktop or, at my office and work, that I think is a huge bonus for productivity long term. And so you can see these mentions right now of people who are talking about, conducting business, not just online, but on their mobile devices, which is something that DocuSign enables, is at nearly all-time highs. So these are definitely tailwinds for DocuSign. But at least from our perspective, whenever we look at this comprehensively, all of the metrics, we do want to note that there is a bit of a slowdown in terms of that growth rate that we've noticed, but we do see positive signs long term, especially from a lot of these macro tailwinds.
Yeah, Megan, I'll agree with Kevin on that perception that once a company or a business or a person adopts this type of technology, they can't really go back, or they don't want to go back. Even though maybe you get a rental car somewhere, Kevin, where you actually have to use the handle to roll up and down the window. You don't want that, but you want to adopt it. So when you look at the total addressable market in here, and as they continue to expand, I mean, this stock is below 2019 levels, and Kevin mentioned the growth numbers here. So based on your data, are you guys pretty positive going into earnings for this company? Because it seems like everything's going right. It just seems maybe the market had the valuations too high previously.
Yeah, I think that you're exactly right. Our data definitely is turning more positive for this company. Last week, whenever we generated an earnings score, that earnings score was a +9, which is technically neutral, but still positive. This week, the earnings score is a +22. So that, tilts just into that cautiously bullish area for us. But we do like that we are seeing signs of improvement. We like the solid levels of consumer happiness. But just a little bit cautious heading into these earnings, considering, other macro factors that play just in the near term.
Yeah, definitely some headwinds, but definitely big total addressable market. All right, great stuff as always, Megan. Thanks for the data.
Thanks for having me, guys. Appreciate it.
All right, that's Megan Brantley, Vice President of Research at Likefolio. Kev,